Chapter 5 Financial Statements and Closing the Accounting Year. Before you proceed, you want to verify that your trial balance from Chapter 4 is accurate. To do that, you want to go to Reports, Accountant and Taxes and click Trial Balance. Customize your report by getting your period correctly as of December 31 of last year. Be sure to match all the individual account balances, not just the bottom line. The closing process in manual accounting is much longer than the closing process in computerized accounting. The chapter discussions illustrate the closing process in manual accounting. Only nominal or temporary accounts are closed. The real or permanent accounts are left open for the next accounting year. The revenue and expense accounts are temporary or nominal accounts. Nominal came from the root word name, meaning they are accounts only in name and appear only during the year because they will be closed by the year end. The closing process of computerized accounting is built in the system, and thus the behind the scene entries will not be visible. The process is just a click of a mouse. Therefore, you need to read and understand the chapter discussions of the closing process in manual accounting so you can relate and understand the closing process in computerized accounting. You will observe that manual accounting uses income summary for a sole proprietorship. This account is used to close revenue and expense accounts, and this account is also closed at the end of the year because it's a temporary account. However, computerized accounting does not use income summary but instead uses retained earnings. The behind the scene closing entries to close revenue and expense accounts uses retained earnings as a clearing account. If you remember in Chapter 1, when you set up the chart of accounts, the classification of retained earnings is an equity account and is not closed at the end of the year. By definition, retained earnings account is an equity account that shows the accumulated net income and net loss of the business reduced by the owner's drawing account. Since this is an equity account, it will be found in the balance sheet. Now observe that in the real business world, there may be an accounting period where the owner did not withdraw anything from the business. Therefore, the owner's drawing account will not have a balance. However, if there is a balance at the end of the year, just like our practice set, you will need to close that drawing account since it's also a temporary account. Because of this, computerized accounting software users will have to record an entry to close the drawing account. The reason why QuickBooks does not automatically close drawing account is to allow users to close it with an offset using either the retained earnings or the capital account. You have observed that manual accounting closes the drawing to the capital. Since retained earning is used to close revenue and expense and is left with an open balance, QuickBooks users can close the drawing account against retained earnings in the event that the capital balance is less than the drawing. Let's start closing our year. To do that, you want to go to Edit and then click your preferences, and on accounting, use your accounting preferences and closing period through which the books is closed. Set your password. Your closing date will be December 31 of last year. Your closing date password that you will remember, please set this up and you will be asked to enter this again in the future. So enter your closing date password. This is a good internal control feature of QuickBooks so that other users may be aware that there is only a selected few or just a person who is responsible for closing the books. So click OK to that, and now after the closing entry has been done to close your revenue, you want to determine all your reports. So find out if your trial balance as of last year matched that of the chapter. The individual account balances must match. And once you have closed the books, note that your drawing account still has a balance because that's not manually done by QuickBooks. Again, it allows the users to use either retained earnings or the capital account to close the drawing. So we will have to be closing the drawing, and to close that, you want to go to company, make journal entry, and date this for December 31 of last year. Note that the drawing is a debit balance, so you will close that with a credit. So your entry number is 15, and your offset, you're going to close that to your capital account for 2,575, and your memo will be to close the drawing account, and your credit will be to the drawing account. So that will clear that account once this gets posted. So you want to save and close since this is the only entry that you will have, and now it's asking you for your closing date password because technically the drawing must be done before the closing process. So once you have entered that in, you're authorized, your drawing account will be now at a zero balance. And note that your capital was reduced by the amount of the drawing. So you want to verify all your reports. First, you wanted to look at your trial balance now, this time after the closing process and before the closing. This is after the closing of your draw, December 31. Now, after the closing process, which is January 1st of the next year, if you look at your January 1st trial balance, you will see that all your accounts are permanent accounts, the real accounts. They're left open for the next accounting period. So get your profit and loss statement, go to company and financial statements, and get your profit and loss for the year January 1st to December 31. Be sure it matches the individual account balances. Then you want to get your balance sheet, and the same thing, you want to verify that each of the account balances are matching with the chapter discussion. So you will be comfortable to move forward to the next chapter. This balance sheet will be what you will use for chapter 6.